Hey everyone, welcome back to Corporate Decoder, the place where we dive into the world of corporate filings. Today, we're cracking open MariMed's latest 10K, their annual report. This one's a little like finding the prize in a Cracker Jack box, except the prize is financial data and risk assessments, not a plastic toy. We'll see if the numbers have them soaring high or grounded for turbulence. Scroll December 31, 2024/non-numeric. This report covers the fiscal year that ended December 31, 2024. MariMed is a company that operates in the cannabis industry. They grow, produce, and sell cannabis and cannabis-infused products. Think flowers, edibles, concentrates, all that good stuff. They also license their brands, allowing other companies to use their names and products. A big part of MariMed's story is their strategic growth plan. They're focused on buying up companies they used to advise. It's like they're saying, we helped you get here, now we're joining forces. The last of these purchases, First State Compassion Center in Delaware, just wrapped up in late February 2025. Another focus for them is on beefing up their brand and product lines. This means making sure they can consistently produce high-quality stuff, launching new products, and getting their brands in more stores. They also want to keep boosting sales in their own retail locations, giving customers a great experience and maybe opening up new stores. In 2023, they scored a pretty sweet deal by refinancing their debt. They managed to get a lower interest rate on a new credit line from Needham Bank. This allowed them to pay off some expensive loans and free up some assets. One of their biggest strengths is their portfolio of brands. They've got a bunch of popular names like Nature's Heritage, Betty's Eddies, Bubby's Baked, Vibations, and In-House. These brands cover different kinds of cannabis products, edibles, drinks, and even ice cream. They're also expanding their retail operations. They've got stores in states that have a good customer base and friendly regulations. They're aiming to make shopping for cannabis comfortable, educational, and easy. They also are expanding their delivery operations too. Their management team is experienced, and the people at the top have been in this industry for years. They know the ins and outs of getting licenses, running operations, and navigating the complex rules set by each state. MariMed currently has 33 cannabis licenses in 6 states. They want to be fully vertical in more places, meaning they handle everything from growing the cannabis to selling it in their own stores. In Massachusetts, they've got 3 dispensaries around Boston plus cultivation and production facilities. Delaware, they provide services to First State Compassion Center, a longtime client. Illinois is another big market for them. They operate 5 dispensaries in the southern part of the state. They've also got a processing facility there and expect to start growing their own cannabis soon. In Maryland, they are fully vertical. Growing, processing, and selling. They even acquired another dispensary in April 2024. They're also expanding into Missouri through a management contract, and they have a dispensary in Ohio that's now allowed to sell to the general public. But this journey is not without its bumps. They face intense competition. Since cannabis remains illegal at the federal level, it creates all sorts of risks. During the last 3 months of 2024, they issued shares for licensing and royalty agreements. These issuances will dilute ownership of existing investors. Let's talk about risks. First, cannabis is still illegal under U.S. federal law. Even if they follow state laws, they could still face trouble from the federal government. This could lead to fines, penalties, or even criminal charges. There's also a lot of uncertainty about how cannabis might be regulated in the future, perhaps if it is rescheduled. The FDA could get involved, which could mean new rules, costs, and requirements. The cannabis industry itself is still pretty new, and there's no guarantee that it will keep growing or that people will accept cannabis the way MariMed hopes. Another challenge is competition from other products, things like hemp-derived THC products or even eventually magic mushrooms. It is thought that those items can have greater access to market with fewer restrictions. The company has to navigate a complex web of regulations which can change all the time. Failing to comply could mean losing licenses or facing fines. And because cannabis is still federally illegal, their assets could be seized by law enforcement. They may lack access to bankruptcy protections or banking services. Their growth depends on more states legalizing cannabis. Expanding into new markets can be slow and uncertain, and they face increasing competition from bigger companies. They're also subject to limits on how many licenses they can own in some states. Finally, consumer perception of cannabis could change, and they could face product liability claims if someone gets hurt using their products. Insurance is another headache. Their coverage might not be enough to cover all their risks. The numbers can jump around a lot quarter to quarter, making it hard to predict how they'll perform. If their goodwill or the value of their brand names and customer relationships goes down, they might have to take a big write-down, which would hurt their earnings. They're growing an agricultural product, so they are subject to all the risks of farming. Their business is subject to environmental regulations, anti-money laundering laws. The company relies heavily on key personnel. Losing them could negatively impact growth. Acquisitions come with their own risks. Integrating new businesses can be tough. Cybersecurity is also a concern. Breaches could disrupt their operations and expose sensitive information, and also a cybersecurity event they suffered in late 2023. Scroll the United States. The audit committee of the company/Scroll. It might be hard for people in the United States to trade their stock because of the federal illegality of cannabis. Issuing more shares would dilute the value of existing shares. Their stock price has been volatile in the past and could continue to be so. As an emerging growth company, they can take advantage of some reduced reporting requirements, which could make their stock less attractive to some investors. Their internal controls over financial reporting might not be effective, which could also hurt their stock price. Alright, let's take a look at the financials. The report comes with the opinion of their independent accounting firm. Scrolling down to their balance sheet, at the end of 2024, they had about $7.3 million in cash, down from $14.6 million the year before. Total assets in 2024 amounted to $206.9 million. Accounts payable were $13.1 million in 2024. Total liabilities of the company were $128 million. Looking at the income statement, total revenue was about $158 million, and net loss to common stockholders was $12.1 million. It also looks like they had to pay $8.1 million in income tax. Taking a peek at the cash flow statement, operations brought in $6.8 million, while investing activities used up $17.1 million. Financing activities gave them $3 million in cash. Let's talk about something called adjusted EBITDA. This isn't a normal accounting number. Instead, it is something that management uses because it excludes a bunch of costs like depreciation, amortization, stock compensation. Think of it as a way to look at the core profitability of the business without the noise. For 2024, their adjusted EBITDA was $19.6 million compared to $24.7 million the previous year. So, it went down. The company vice president of information technology is primarily responsible for the assessment and management of material cybersecurity risks and establishing and maintaining adequate and effective internal controls covering cybersecurity matters. In 2023, they got hit by a cyber attack that cost them $0.7 million. That's a painful lesson in the importance of cybersecurity. Important to note here that information about the board of directors will be discussed in a later filing, so be on the lookout for that in the next few months. To summarize, MariMed is expanding their business. Their plan isn't risk-free and also is affected by legal regulatory hurdles. So what's my take? MariMed has a decent strategy. They have a good management team and have been growing but still have risks like regulatory hurdles and outside competition. This recent report shows that they may be on the right path, but this progress isn't guaranteed. Thanks for watching. If you found this breakdown helpful, please smash that like button, leave a comment, and subscribe for more corporate deep dives. See you next time on Corporate Decoder.